Hello everybody, welcome back to another live stream. So we're going to be talking about what happened in the FOMC minutes. That's going to be most important. How is that going to have an effect over the next couple of months, but also into next year? Because that's where we see the market going one way and the Fed going another way. So you need to hear all about that. And then also a little bit of news, but most importantly, having a look at these key areas that we are touching. So make sure you obviously stay tuned. And most importantly, hit the subscribe button and hit the like button if you like it. Hit the dislike button if you don't. But if you dislike it, then, AJ will probably come for you in your dreams. How are you feeling about today, AJ?
Good, yeah. A lot to look at, a lot to look at, a lot of charts to look at today. We have broken down out of a major support level, so I'll show you that. We're also going to look at the traditional market as well, because as we know, the traditional market is very correlated with the crypto market as well, and some, not so good things may be happening in the traditional market as well. So we'll be having a look at that.
Very, very true. So I just want to quickly bring up, obviously, the main thing that happened yesterday. It was quite late at night for me over here. But it was the FOMC minutes that came out. And that was basically the minute notes from the meeting in July for the Federal Open Market Committee, Fomc, or FOMC, as people like to say it. And basically what they said was, 75 basis point hike. Everyone agreed on that. Now, currently, I believe it's about 60% likelihood that we're going to see a 50 basis point hike coming up next month. In fact, let me just even have a look at that, see if it's changed any at all. But we're we're predominantly looking 65% now, looking at a 50 basis point hike coming up in September when they go live. And to be honest, the market and also the Fed are on track. They're both saying, hey, we're going to have 3.4% roughly as the Fed funds rate. So around about that number, which is going to be pretty much, so from here, maybe a jump up to here. And then we might have, so this is going to be a 50, a 50, and then either a 0, which is kind of is quite likely, or we're going to end up around this level. So the kind of 3.4 is going to be the minimum. Anything above that, but that's kind of where they're both heading. That's where both of the heads are for the market and also for the Fed. Now,
what I found quite interesting was that yesterday it was actually, I don't know if you looked at it yesterday, but yesterday it was 50-50, and that was before we broke this support that we're going to look at later on in the charts as well. But now that we've broken the support, it's swayed more to 60, 65, 30, 35, which is quite interesting.
It is, yeah. And I think, when we do have these different breaks in the traditional market, it just shows the market are like, oh, okay, well, hang on, let's reevaluate this for a second.
Yeah.
So there is active response, which I think is quite nice because you're able to read it. It kind of helps you read the market. But anyway, by the time we get to 2023, this is where everyone's, not on the same page. Fed are saying, look, we're going to continue raising rates. I believe they want to get to 4% in total by the end of 2023. But also, that means that they're going to continue raising and also keep it at that elevated level for a whole year and only then start bringing it down. So that's one thing. Fed are, kind of anticipating it's going to go up. But then looking at the markets, I think the markets are kind of anticipating that it's going to stay the same or it'll even begin to go down. So if we do end up around about this 3.5 to 3.75, looking 3 months in advance, it's kind of looking like we're still going to stay there, and then obviously the data's not as strong the further down you go, but still most likely is that, the Fed are only anticipating a tiny little increase. So, it's hard to say. That's where we begin to get a bit of a disassociation. But anyway, I'm going to just rattle through a couple different things. Meta have come to Europe. Anybody in Europe? Well, not anyone in Europe. Anybody in Spain, France? You can now have a little perusal on Metaverse's game. So this is the kind of metaverse game. As you see, it's called Horizon Worlds. You get your VR headset in, you start to walk around, and then you can go and play on these different games, etc. You can go into here, obviously have a little look around, play on different games, have some fun, which I can kind of this is now the beginning of the metaverse. It's nice to see this, and it's nice to see Meta actually making some progress. But there's just so much FUD around them, actually just completely flopping.
It's quite
AJ,
cool.
does this appeal to you?
Looking at the video, it looks quite fun. It's not something I'd play every day. I don't really play video games much anymore.
You've muted yourself there, mate. Oh no, I haven't. No, it's my fault. No, it's me.
Yeah. Okay. Yeah. Well, that video looks good. I would love to try it out. It's not something that I would do every day. I'm sort of past my video game days, but it does look quite cool, and it is something I think I would like to try.
Relatively engaging, it is quite good. It is quite good. And kind of on that whole like tech, looking at centralized tech, because that is one of the issues, is that obviously Meta is extremely centralized by like one man and a few shareholders. People are worried now about centralization within Ethereum nodes, especially the validator nodes. So, what we have is these nodes need to be run somehow, and people are now, in order to run these nodes as a validator, for example, on both Ethereum and Solana, people are looking towards cloud service.
Spread betting right for me? Get more.
Oh, is that me? No, it's not. Amazon. So Amazon has 52% of the validators. And then we have Hetzner Online, German company, obviously. And then also we have Oracle Cloud sitting at 4.1%. We also then have OVH at 4.2, Alibaba at 4, and Google at 3.5. So, very, very very centralized. And also some of the concerns are that obviously because it costs a lot to run this, to run a node, people are going to look towards AWS, but it makes it it has more exposure, to central points of failure. So if AWS go down, same is true with Solana. For example, 42% is hosted by Hetzner, which we just saw, and then OVH 26%, AWS 3%. But what if there's some kind of regulation change in the US or in Germany, for example, where we see that these guys do have a lot of power, and especially as if you need to be a validator to work on a proof of stake blockchain, and if Ethereum moves exclusively to proof of stake, does that put a lot of power into the hands of the US, and is that a good thing? Drop a comment down below. I don't know quite how to feel about that. I think obviously if it was in a country such as China, people would be a little bit more concerned. But that is something that I think we should all kind of have a bit of thought for. Because we can say, hey, Ethereum's really decentralized. But the question is it really? And where's the base layer? Even everyone's worried about JP Morgan, as far as Ethereum is going. But I'm just going to wrap this up now before we head into some technical with Senor AJ. Can I call you Jesus, AJ? I'm going to call you Jesus. And yeah, so just basically, Bitcoin price heads over 23.5 after EU's highest inflation in history. Let's have a look at how that has materialized, and are we above that? Are we below it? What are we currently looking at, and where are we going to be going with the price of Bitcoin?
We are currently sat at $23,500 as we speak. As you can see here. So
hurrah.
Yeah,
is this a retest?
Not yet, not as of yet. Looking at the chart here, you can see very, very clearly on this 4-hour chart yesterday, we did get that break towards the downside of this major support level, which it isn't too good. But looking on the sort of brighter side of things, we can see that the indicators are in that very, very oversold vicinity. Even the RSI got down to around 33, 34. The stochastic RSI are very, very oversold. So there is a possibility that we could come back up and break above this support level, this previous support, which will act as resistance, or we could get a rejection. But initially, I do think we are going to come up and have a little retest of this previous support, now resistance level, because those indicators are, they are in that oversold region. So that's sort of what I'm looking at in that shorter term. So I do expect a little push towards the upside, but because we have broken out of this because we've broken out of this rising wedge pattern, it is technically bearish, and sort of the technical target is down at the very bottom around $19,000. So it's not looking too good, but of course we could break above this resistance and we could call this a fake out and continue this nice price action towards the upside. But we will just have to wait and see what happens with that. The same stories on the 8-hour, so I won't go through that, but the exact same story on the 8-hour. Just quickly, indicators as well. If the charts want to load up, there we go. The indicators are in that over.
Is there anything that would indicate to you that we are like looking at any other assets or charts or anything that might add on some like validity to this, or questions or any guidance?
Yeah. So I wanted to take a quick look into the traditional market and some tweets here as well. Ooh. I know that you sent this tweet in from Justin Bennett. He says, this is mind-blowing. The S&P 500 is mimicking the 2008 crash. Even the timing since all-time high is nearly identical. The bottom is not in for stocks or crypto. This is what Justin Bennett does think. And looking at this, if you ask me, it does look very
worryingly close, isn't it?
Very similar, yeah. So this is the current on the left, and on the right is a 2008 crash. This is on the S&P 500, so we will have a look at the S&P 500 chart as well. But if this does play out and we do get a rejection from this red line that you can see on this chart here, then there is a possibility that the 2008 scenario could play out as well. So we do just have to keep that in the back of our minds. And because, chart, we have broken this bearish pattern, and, the target is sort of technically around $19,000, we could see lower than that as well. So we just have to be careful there. There's another chart also I want to show you. This one is from Ian McMillan. This is just another scenario on the S&P 500 as well. So back in 2007, 2008, it's looking pretty similar to that on this chart as well. And what he's looking at here is this 200 moving average, this orange line here, and I will pull this up on the charts for you as well. But we are, as of right now, we are testing it. When he released this tweet, we weren't testing this 200 MA, but as of right now, we are testing it. If I just take a quick look at this chart here, you can see that this 200 MA is being tested as of right now, and technically we have had a rejection from it. And we've also kissed this resistance level here, this white downtrending resistance level, which for me, the S&P 500 needs to get above to sort of confirm that we are in that we are back in that bull market. But because we have, retested that and it looks like we are getting a rejection right now, this could be incredibly bearish, and this could be that next leg down for the traditional market. Looking at the Nasdaq as well, we've got the exact same trend line, this downtrending white line here. But on the Nasdaq, we did actually break towards the upside. As you can see right here, we did get that break towards the upside. And for me to sort of confirm that the traditional market is in that sort of bull market again, we do need to break above this red line on this chart here for the S&P 500. But the S&P 500 also needs to break above the 200 MA and this downwards white trending line here as well, for me to sort of confirm that we are in a bull market in the traditional market, which will most likely follow through into the crypto market. But if we do see a rejection here, then there is that possibility that we are going to have that next leg down for the traditional market, which will bring us that next, where's my chart here, that next leg down here on the crypto market as well.
There you go. Guys, are there any other coins that you want us to quickly go through, or should we do that separately?
I'll just update on the link chart, on the link trade. I did mention this last Friday and Saturday. I went through this link trade with you. The entry point was around 9.15, and we hit the first TP last night. I was asleep whilst this happened, so I didn't manage to take profit perfectly, but that first take profit point was hit. And on the trade, you can see that I did take a bit of profit off of this as well. Not at the TP point, just a little bit above, because as I said, I was asleep and I did miss it. But yeah, we are still around 55% in a profit on this trade. When I took profit, it was around 60% in a profit. So yeah, nice profit taking from this trade. And yeah, I am just waiting to see if we can come down to hit that TP2. I have moved my stop loss to just below that entry point, meaning that there is no chance that I can lose money. And yeah, that's always what I do. Once we hit that first TP, I move that stop loss just above or below, depending on if it's a long or a short position. Then, you know, I don't lose any money on that trade. So this link trade is doing very well. And yeah, that's good.
That is very good. And also, guys, you know, we obviously post this on Twitter. So if you may want to follow us, click the links down below to open up an account with Bybit or Fomc, and you can earn up to $4,000 as cashback. Really not too bad as, like, you know, just cashback for depositing money, signing up. So make sure you do that and follow us on the trading, because you can see these percentages. I mean, AJ, just kind of bring up that trade. You know, how good are we looking in terms of the return so far?
55% as of right now, just under.
Yeah, I'm not going to turn that down.
No.
But anyway, so look, guys, obviously it's always a pleasure to have you guys with us. Make sure that you subscribe to the channel, and we'll be back tomorrow. In fact, we might even be back a little bit later to mention about the jobs report, initial jobless claims coming out just in a couple minutes, actually. What we'll do, we'll probably update you on Twitter, maybe go live, depending if there's some volatility or not. But watch out for that, guys. 5 minutes, you're going to have a bit of volatility.
Just 1 minute, really quickly. I forgot to mention this as well. Cash levels are at their high since 2001. So there is plenty of cash on the sideline. This is sort of indicating to me that a lot of people are still very unsure on what is going on. So people are holding off investing into risk assets such as Bitcoin, such as the traditional markets. So just be aware of that as well. There's a lot of cash on the side in sort of signaling to me that there is potential for lower as well, because people are waiting for those lower prices before they put their cash into these riskier assets.
There you go. Okay. Thank you very much, guys. We will see you tomorrow. Always use protection and stay safe.
Yeah. Thank you for watching.